Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral, Dadia. We have with us Roopam, Asthana, CEO and WTD at Liberty General Insurance, joining in. Roopam, good afternoon and welcome to the show, and always a pleasure to speak to you. Roopam, my first question coming to you is, one of the industries that's actually impacted on the back of COVID in one way or the other is insurance as a whole. How do you see the impact from March to now?
So first of all, Hiral, absolute pleasure to talk to you and be associated with Nirmal Bank Securities. Of course, the entire pandemic, which started off in March, has had a impact on the insurance industry at various levels. And let me just quickly enumerate some of those impacts that we are seeing, and the expanse or the size of those impacts, right? First of all is the direct impact, which is really in terms of COVID claims. These are clearly something which are on the rise again as we speak. So if we were to look at it in terms of the total claims that have been reported so far, and these are all where the COVID patients have been admitted to private hospitals and have had some kind or the other kind of health insurance, and they are now claiming under that, is already crossed almost 15,000 crores, right? So 15,000 crores, 10 lakh, 10.27 lakh claims. This is as of 12th. So, the number is increasing quite rapidly. Now, on 15,000 crores probably in itself may not make, the impact that this is actually making on the industry. But if you look at it in terms of what is the expected annual premium for all health insurance products, and this includes the retail personal health insurance, the group health insurance, the government health insurance, also some kinds of travel insurance, which are all included in the health line of business as far as the regulator is concerned. The entire premium of this business for this year ending March 31 is estimated at about 58,000 crores. Right? So we are talking of almost a 26% of the total premium being paid out in the form of claims just for COVID. So that is the first impact, I think, that is being seen as far as the industry is concerned. And this is the direct impact. The second impact, or some of the other forms of impact that we are seeing are actually a little more indirect. So the second thing is clearly the awareness of health insurance has increased considerably, right? So what we are seeing in the market today is that there are a lot of inquiries for health insurance. Folks are buying the COVID only kind of health insurance products as well as the general health insurance products. And actually, if you look at it, on a year-on-year basis from April to I have figures up to February. March numbers are still to come out, but the health insurance business overall for the industry has grown by about 13%. Wow. Right? So this is the other impact. Now, the expected outcome of this is really continued growth in health insurance, because the awareness levels have gone up. People have started to realize the cost of medical attention, the cost of hospitalization, because lot many people around us are falling ill and going to hospitals. So I'm hoping that this awareness that has gone up will also lead to further penetration as far as health insurance is concerned. Because we as a country are very desperately underpenetrated as far as health insurance is concerned. So that's the second impact that we expect to see. Both of these, as I've just outlined, are direct impacts from a health insurance point of view. Now let's look beyond health insurance and see what are some of the other impacts. One of the key, developments that we are seeing in the market today is actually a loss of business sentiment and consumer confidence. Now you may say, how does that impact health? How does that impact insurance? Right? Now, the moment your business sentiment becomes negative, your business owners and entrepreneurs, don't look at expansion of their business. If they don't expand business, the assets that are expected to get created through the expansion does not happen. And insurance, as you know, is all about protecting assets, right? So that's going to be a negative impact. From a consumer confidence point of view, again, I think the second wave probably is going to have a larger impact or larger negative impact on consumer confidence. What this means is that people like you and me, who are salaried, who are employed, or are working for the organized or unorganized center businesses, suddenly believe that there could be a possibility of job loss, or there could be a possibility of salary cuts, or they may not get the next increment. Right. So what then happens is that they basically tighten the purse strings and don't want to spend. Right. And actually, if they don't want to spend, one of the areas that gets impacted is insurance, because insurance in terms of priority of spend comes pretty low down. Because if we have money to spend, we'll probably spend it on food first, on our rents, on our EMIs, on health, and actually insurance for other assets will come down pretty low in priority. So we do expect to see some drop in renewals, motor insurance renewals, personal accident renewals, fire insurance renewals. All of these are going to get impacted, and also new purchases may also get impacted because cash flows are impacted. Right? Small businesses, which is again a very underpenetrated segment as far as insurance is concerned, is seeing desperate and pretty acute cash flow issues, and that also is going to impact purchase of insurance. So these are the negative impacts, that we are seeing as far as insurance is concerned. Now let's look at it from another lens. When you look at it in terms of how people are purchasing insurance and how insurance companies are servicing customers, there has been again a huge impact in terms of increased digitization or digitalization or whatever you may, right? Because today offices are shut. People can't go out. They can't meet their agents. They can't go out to buy insurance, and therefore a lot of the insurance is being bought online. So that's another big impact that we are seeing. But I think the bigger impact that we are seeing is actually within the insurance companies. People like me are today sitting at home because they don't have the ability to go out and work out of offices. So work from home has now become a norm. It's no longer a pandemic only phenomena. I think it's something which is going to continue over a period of time. And the insurance companies are also forced to look at digital assets to be able to service their customers, to do day-to-day activities. So within the insurance company, the digitization speed has accelerated considerably. So I think these are all the impacts that we are seeing, across the value chain, on the insurance business as far as the pandemic is concerned.
Right. So from here on, Roopam, we've spoken about the segments which could be slightly muted going ahead, where renewals could be a little poor. But which segments of business do you think will see a lot of traction? Do you think it's mainly going to be health, or with health, do you see even, say, a car insurance or a home insurance that could gain traction, taking into consideration the kind of, real estate sales that's coming up, the kind of auto numbers that are coming up?
So, yes, I mean, I would love to see that, motor insurance grow and home insurance grow. But if we were to just look at it, how have the different lines of business done, during this period? It will give us some indication of what's coming ahead of us. So if you look at the different lines of business within the general insurance industry at this point in time and see the growth levels or the degrowth levels across, you will find that fire insurance, which is basically the corporates, largely the corporate businesses, insuring their factories, their godowns, their workshops, their warehouses, etc. That fire insurance business in the April to February period has grown by about 28%. So that's a combination of bit of price increase and a bit of fear that has kind of come in, and therefore that is showing growth. Excuse me. The other thing is clearly health, which we talked about earlier. So as I said, insurance has grown by 13%. Now let's look at motor insurance. Motor insurance actually during this period, so April to February, covers a large part of the first wave of the pandemic, and thereafter, a short period of post-pandemic, right? And therefore, it's a mix of these kind of periods. The motor insurance business is actually degrown by 4% over this period. right? So the motor insurance degrowth is a combination. It's a combination of the fact that we had a few months where actually no motor vehicles were sold, because of the national lockdowns, right? And also of what I talked about earlier is a loss of consumer confidence, a issue in terms of cash flows, resulting in people not renewing their insurance.
Yeah.
This is something which we are seeing now. Now, let's look at and see how is it going to impact going ahead. So clearly, as I mentioned earlier, health insurance is clearly something which we expect to see double-digit growth from here on. Motor insurance, to a large extent, will depend on the sale of new vehicles coming through. And I think my belief is that actually, as we get out of the second wave and business sentiment starts to normalize, I would tend to see a kind of a V-shaped growth in terms of sale of motor vehicles, right? And therefore, the motor insurance business should take off once the situation normalizes and to a large extent, right? So that is the second part. The third impact that I expect to see is actually, if you look at it in terms of what the government is trying to do. So if you recall the budget announcement that were made, the government is actually stepping up its spending. A lot of infrastructure spending that is going to happen, and a lot of that, as it comes on the ground, will need insurance. So we expect to see property insurance, fire insurance business also grow. So in a sense, we expect to see growth, I think, across a number of lines of business, within the general insurance industry. So overall, if I was to look at it, my belief is that the general insurance business is set for a medium to a long-term growth trajectory, which is going to be a double-digit growth trajectory. So I am very optimistic about the growth prospects of the general insurance business.
Right. So with this, even if you have to talk about health, in terms of an average claim right now, how has the trend been?
So, you see, what has happened during this period is that the COVID claims have become larger. I mean, there's a very substantial number of COVID claims. However, the non-COVID claims have reduced, right? Simply because, all the hospital beds are taken up for COVID patients. So you would have probably heard the government announcements, which are basically saying that all optional treatments, please delay them. Don't go to hospitals for treatments which can actually be delayed, right? So as a result, what we have seen is that the number of COVID claims has increased, but the non-COVID claims have actually reduced, right? COVID claims on an average, are getting reported in the range of 1 lakh to 1,20,000, 1,30,000. So that's the average size of the COVID claims. The non-COVID claims, now what's happening is that since the optional treatments are being delayed, only those who are desperately unwell and really need emergency treatment are going to the hospitals for non-COVID treatments. And therefore, those claim sizes are also larger because they need more, more involved or more intense treatment. So we are seeing that the claim sizes for non-COVID claims has also gone up. But the number of claims for non-COVID has come down. So that's the kind of trends that we are seeing as far as health insurance claims are concerned.
Right. And with this, another aspect that we've seen with regards to where general insurance is concerned is that, the restrictions that we saw on the pandemic, it helped the sector achieve underwriting profits. And this was in several segments of business if you talk about 2020. Do you think these underwriting profits are sustainable in 2021 as well?
So I think, first of all, let's understand, how those benefits arose. Right. So those benefits arose largely on the motor insurance side of the business, where, there was a national lockdown for a few months, and therefore, the number of cars on the road reduced, the amount of kilometers that the cars have been traveling came down, and therefore the claims also came down. But fortunately or unfortunately, that was a very short phenomenon, that lasted just for 3 months, after which the number of motor claims has normalized. So actually today, if you look at it, even in the state of Maharashtra, while the auto dealerships which sell cars are shut, but the auto workshops are allowed to open because they are part of the transportation. So So we are still seeing, the motor claims come in, largely at the same level as the pre-pandemic, right? So the impact that we saw of the pandemic on motor insurance loss rates in terms of underwriting improvements that you talk about was very short-lived. That's pretty much back. On the health side, the COVID claims have just taken over. I talked about, 15,000 crores of claims coming through. So what has we seen on the health side is that the benefit that the insurance companies might have got in reduction of the non-COVID claims was more than compensated by the COVID claims. So on an overall basis, the performance of the portfolio on the health side remained as in the previous periods. So there is I think the underwriting improvement that we are seeing in the operations of some of the insurance companies, in my view, are short-lived. Because what we are also seeing again is that because the growth in the industry has been muted. I mean, we're talking of, overall growth, April to February of about 3.5, 3.6%. And we are all used to, 12, 13% kind of growth. So what we are also seeing is some irrational competition in the market at this point in time, which is leading to, drop in prices, et cetera, which is probably going to, result in, again, underwriting losses in the coming times. So clearly, if I was to give you a straight answer, the underwriting performance of this year is probably not going to get repeated in the coming periods. And we are probably going to go back to a situation where the insurance industry as an overall will show an underwriting loss.
Right. And with this, I mean, a lot of insurance companies were of the opinion that the government has now said that all the plans, in terms of health insurance, should cover COVID as well. On the back of which the anticipation was that probably 20 to 40% increase that could come in terms of premiums. Have the premiums gone up already, or do you think insurance companies would increase premiums from here on?
See, my belief is that the premiums would have gone up even if we were not facing the COVID pandemic that we are seeing right now. Simply because, a number of the companies had not increased their health insurance premiums for the last few years. And actually, if you look at the health claims data from the Insurance Information Bureau, you'll see that for the last 4 to 5 years, on an average, the claim inflation has been in the range of 10 to 10.5%, right? So every year, the claim size is going up by 10 to 10 and 10.5%, whereas the premiums had not been increased for a couple of years. So irrespective of whether there was COVID or not, the prices would have gone up, the premium would have gone up, right? Now, unfortunately, what has happened is that the situation has been, worsened by the COVID claims that are coming through. I told you that of the total premium collected, COVID claims alone are amounting to something in the range of 25 to 26%. Right? So while this situation may not continue for an unlimited period of time, I think there is going to be some correction in health insurance pricing that we are going to see in the coming months.
Right. And with this, another aspect that we would want to consider with regards to our insurance goes is as to how are we seeing, survival for insurance companies. Taking the pandemic into consideration, do you think it's going to be mainly survival of the fittest, or do you think it's going to be easy to survive this pandemic or 20 to 23 as a year?
See, I don't think the pandemic is going to create financial stress, inordinate financial stress on the general insurance business. Simply because the fact is that corporate insurance continues, irrespective. If the factories shut or open, the corporates will continue to insure their factories, right? Which is why we are seeing fire insurance by 28%, right? So I think motor insurance, largely, you and I as risk aware consumers will continue to insure our motor vehicles, despite the fact that, for a couple of months, there may be lockdown or kind of quasi-lockdown situations in the cities that we live in, right? So I think in that sense, I don't expect to see a lot of financial stress on the insurance companies, except probably for those which have a very large part of their business focused on health insurance.
Okay.
For example, the standalone health insurance companies, right, who do only health insurance. Now, their cost would have gone up by 15 to 18% just because of COVID, right? So I think, except for those, we don't, I at least don't expect to see, very large scale financial stress as far as the balance sheets of insurance companies are concerned. And I think the regulator is also very sensible. So if you look at it from a solvency point of view, the regulator insists on 1.5x, which means that actually you may require only 1x, but there is a buffer of 0.5x as far as capital is concerned from a solvency point of view, right? So I think we are adequately capitalized as an industry to withstand the shock or whatever is felt as far as the pandemic is concerned.
Right. Right.
My view, yeah, sorry.
And Rupam, but with the government's proposal to hike FDI as well, to 74%, now this is going to be one avenue where, sources of funding for the players increases. Do you think it would also help them strengthen their solvency accordingly?
No, this is exactly the point that I was going to make earlier in continuation to what was. Is that what we are seeing is that, as an industry, we are very underpenetrated, right? And therefore, for us to expand and increase penetration and grow, we need to get more and more capital within the industry, increase our distribution, to increase the number of outlets that we have across the country, to hire more people, to invest in technology, to be able to create products, to be able to create, the databases and the facilities to be able to do superior analytics, etc., etc. Right? Now, all of this requires capital. And one area where I think at this point in time there is a paucity is on the capital front. And let me kind of tell you why I think that we are seeing this paucity of capital. This paucity of capital is coming on account of various things. One, if you look at some of the Indian promoters of the insurance companies that have been in business for a few years, you will find that these promoters, their own main businesses are struggling, right? And therefore, their ability to actually take out money from their main businesses and put into insurance is impacted. So they can't invest money. And that's why you are seeing a lot of M&A activity in the insurance business today, where a number of the promoters are selling out or merging with other companies simply because they are not able to put in the required capital for that next phase of growth. So that's one reason. The second reason is the fact that the central bank, which is Reserve Bank of India, has actually, kind of directed banks to reduce their exposure to insurance companies. And therefore, that was another source of capital for the insurance business, which is now to a very large extent kind of throttled. Right? Therefore, I think in this kind of a situation, the increase in FDI to 74% is probably a lifesaver as far as the industry is concerned. Because what this will do is this will bring in, deep-pocketed international insurance companies who look at India as a very attractive market to come in and bring in long-term capital, which is actually required. So, assistance on the technology front, assistance on the technical expertise, say from an example, from an analytics point of view, real capital that comes in, best practices that come in. I think all of these will benefit the insurance industry substantially.
Right. So with this, do you think we will see high amount of M&As that could keep happening? A lot of PE funds who would enter the insurance industry as well?
Yeah, so I think the PE industry has taken a liking for general insurance, and there is a lot of demand for insurance assets within the fund managers in the PE industry at this point in time. And I don't think there are enough insurance assets available in the market at this point in time. So I expect to see some consolidation, some more M&A activity to happen. So already, quite a bit has happened. So we have companies which have merged. We have companies which are, up for sale at this point in time. There has been change in ownership for a few companies in the market. So I think a lot of that churn is already happening, and a lot of the PEs are already, making their mark as far as the general insurance business is concerned. And I expect to see some more international insurance companies actually come in and attempt to either set up greenfield or look at investing in some of the existing insurance companies in India. So I expect to see a lot more M&A activity happening in the general insurance industry.
Right. And Roopam, overall, with regards to Liberty as well, what will be the organic and inorganic expansion plans? Would we be looking at fundraising as well for the same?
So I think, Liberty General Insurance, as you may be aware, is actually a joint venture between Liberty Mutual Insurance Group, which is a US headquartered, one of the top 5 global PNC or general insurance players. And locally, we have very solid Indian promoters in Enam Securities and the Jindal Group, right? All of whom have deep pockets. And I think that's one area where we differentiate ourselves from other insurance companies in having very financially strong promoters who are very deeply committed to the Indian market, right? So I think for us, capital raising has never been a problem. We already have over 1,000 crores of capital invested in the country through our promoters. Our solvency today is in excess of 2.8 as of 31st of December. 31st March numbers are still to be out. So we are very well capitalized. And the reason why we are over capitalized at this point in time, when a requirement is 1.5x and we are at 2.8, is simply because our promoters are very clear that the company should never be starved of capital for growth. And therefore, the way we are looking at the business is that, this kind of, contraction in business that we are seeing or stress in terms of growth that we are seeing is temporary. And we believe that, and my belief is actually that probably by the festival season this year, which is, October, November time this year, we should probably be back to normal as far as business is concerned. And therefore growth should be back. And at that point in time, we would be very well poised to take advantage of that market growth.
Absolutely. Thank you, Roopam, so much for joining us on the show. It was a pleasure to speak to you. Great candid conversation that we've had. I hope you enjoyed the conversation as well. Hope to speak to you soon again. Thank you and stay safe.
You too, Hiral. Stay safe. Been a pleasure talking to you and look forward to speaking to you again.
Thank you. Thank you.
Bye-bye.